Hello, welcome to Any Answers Answered for July 2018. Tim and I, as usual, will have a look at a couple of questions we've picked from the Any Answers pages of accountingWEB, and hopefully the answers we offer will be useful to you all. We start with a question from the wonderfully named Anne Accountant, A-N-N-E, Anne Accountant, who has asked a question on corporation tax. Now, it's quite a complicated question. Limited company set up 18th of February 2017, doesn't trade in the first year, but will start trading in August 18. Now, my understanding, says Anne, is that corporation tax year should be from the 1st of August to the 31st of July 19, which will take some profits from accounting year ended 28th of February 19, which is that first year of accounts, and some from the accounting period 29th of February 2020. CT will be payable 30th of April 2020, so the February accounts will need to be prepared quickly to make sure that's all dealt with in time. Anne appears to be deciding that the tax is going to run at different times to her accounts preparation. I'm not sure that's the case, is it, Tim?
No, and as John Graganja, if that's a correct pronunciation of a frequent contributor to the Any Answers website, has pointed out, no, it's not correct, you're getting mixed up. There is a rule that a corporation tax accounting period cannot be longer than 12 months, but there is no rule saying it can't be shorter. And what John, if I can call him John, is getting at is that with the dates that you've given us, the accounting reference date will be the end of the month in which the anniversary of incorporation falls, so 28th of February, the first accounting reference date being 28th of February 2018. If the company commences trading on the 1st of August 18, that will be the start of its first corporation tax accounting period. And that corporation tax accounting period will end on the earlier of its accounting reference date or 12 months after it began. And so if there is no change to the accounting reference date, then the first corporation tax accounting period will be the 7 months ending 28th of February 19. And the corporation tax payday will not be April 2020, which is what Anne Accountant was assuming. It'll be 30th of November 19, so 9 months after the end of that first corporation tax accounting period.
So the point here is that we obviously have a dormant period at the start of the company, and various accounts, what have you, would have to be dealt with for that period. But what we're saying is that there's no need to keep going with this end of February date if you don't want to.
Well,
but if you do keep that
exactly.
February date, then your first period where you are trading starts from the 1st of August and will run up to that February 19 date, and then presumably you would then just have 12-month periods from then on.
Correct.
However, you have a second possibility.
Well, another contributor, Matrix, posted in June that the advice would be to change the accounting reference date to 31st of July so that the first corporation tax accounting period coincides with the accounting reference date, and that would then give you a 12-month corporation tax accounting period to the 31st of July 19. So the first CT600 would run for 12 months from 1st August 18, commencement of trade, to 31st July 19. The corporation tax payday, and this will be the first corporation tax payday, will then be 30th of April 2020. In other words, 5 months later than it would be if you hadn't changed the accounting reference date.
Yeah, because your first one was November, wasn't it? So.
Correct. So the twin advantage of Matrix suggestion would be that you synchronise the corporation tax and the accounting periods from the first corporation tax period, and that you delay the first payment of corporation tax by a full 5 months.
Our second question this month comes from Sound Advice, and the question relates to use of home by a company, effectively. Use of home cost limited company, one-man limited company, the director works a lot from home. On a space and time apportionment basis, it looks like around 15% of running costs of the home would be reasonable, and if he had been self-employed, this would create an allowable expense of around £1,500 a year. As he is not self-employed, is there another way around it? Could he charge his company £1,500, then put this rental income on his personal tax return, but offset the £1,500 of costs to pull him back down to zero rental income? I would say Yep, pretty standard fare, I think.
Well, it is pretty standard fare. Tim Vane responded to this posting saying this is common for OMBs, owner-managed businesses. The usual method is a simple rental agreement between the company and the director based on apportionment of expenses as appropriate to ensure a net property income of nil. Just be aware of any CGT consequences, but in most cases this won't be an issue. Well, let's suppose then you've got a sole trader who's worked out that the expenses from working from home on the basis that is supported by examples in the Revenue's Business Income Manual, and it's worth looking at those examples if you want confirmation as to how you could work out the deductible expenses, a reasonable proportion of utility bills, but also council tax and also mortgage interest and insurance premiums and so on, without compromising the capital gains main residence exemption, provided that there is no exclusive business use. So as long as it's non-exclusive, you're working from home in an office that's also a family room, etc., then yes. Okay, let's suppose the sole trader was claiming 1,500 quid. It quite often crops up on incorporation. If you incorporate, what can you do? Well, employers can pay employees £4 a week as incidental costs from working from home without any questions asked, but we're not talking about a miserly £4 a week here. We're talking about 30 quid a week. And the problem is that whereas the sole trader gets a deduction under Section 34 for an expense incurred wholly and exclusively for the purposes of the trade, which is what you'd argue these £1,500 expenses are, as a director, you're subject to the more restrictive employment tax rules and can only get a deduction for an expense incurred wholly, exclusively and necessarily in the performance of the duties. And that's far more difficult. And so the standard advice is what Tim Vane has said, a simple rental agreement between the director and the company, which would provide a rental payment of, let's say, 30 quid a week, and then that is reported as property rental income for the director, and against that the director can set the same expenses as they would have done as a sole trader, because landlords with a property letting income are, and have been for some time now, subject to the same rules for deductibility of expenses, wholly and exclusively for the letting business, as are the self-employed.
So just to clarify the point as far as sound advice is concerned, the answer is, yep, have the agreement in place, make sure the rental agreement is in place. You can claim the 1,500, minus 1,500 on the tax return effectively to pull it back down to zero. That works. Is there anything to stop him also having the £4 a week?
Oh, well, on top of that, you want the 400 quid out of the company? Probably not, but honestly, life's too short. If I was a revenue officer and I could see the use of home as office with the licence agreement going through like that and the £4 a week, it would just wind me up.
I agree entirely.
And it might be all right, but it would make me think I'm going to have a look at something. I'll find something.
You'll find something else.
Yeah.
Hopefully useful. Hopefully you can appreciate that whilst it is standard fare, it still creates an awful lot of questions and problems, whether it's to do with legal drafting, whether it's to do with the £1,000 allowance, all sorts of things to consider in what started off as a very simple question. Hopefully useful to both the two people who posed those questions and everybody else watching. Tim and I will be taking a break for the summer, but we'll be back at the beginning of September to answer some more of your questions. So until then, bye-bye.